Right, welcome back to the program. Let's now take a look at what is happening in the world of business. We'll start here in Nairobi with a look at how your money is working for you. Let's go to the NSE, and the biggest gainers of the day, Standard Group is up 8.77%, a good price of 31 shillings flat. National Bank of Kenya is up 8.54%, going at 22 shillings and 25 cents. Kakuzi is also up 5.26% at 80 shillings. Pan-African Insurance Holdings up 4.42% at 59 shillings, and CFC Insurance Holdings up 4.15% at a price of 10 shillings and 05 cents. Really very positive numbers coming from the gaining counters. Let's take a look at the counters that dropped in this first day of trading. Unga Group is down 6.67 at a price of 14 shillings and 14 shillings flat. TPS East Africa, the owners of Serena Hotels, are down 4.63%, going at 51.50. Rare Vipingo and Access Kenya moving down marginally at 4.60 and 3.80, with prices of 20 shillings and 75 cents for Rare Vipingo and 8 shillings and 85 cents for Access Kenya, as Kabasid Investment closes the losing counters for us, down 2.99% at a price of 130 shillings. It's really not a very bad move. Of course, we do know that impressive numbers coming from the NSE, very bullish, going there. We're edging towards the 5,000 mark. So really positive, interesting news coming from the markets, and understandably coming from just a week after 2 or 3 months of an electioneering period. Really, this is not the norm in the Kenyan market, and the question really begs is, what are we doing right, or what are we not doing right? And I'm now joined in studio by Shadrack Kioko, an analyst who will help me understand how the market is behaving. Karibu sana, Shadrack.
Thank you.
Right, Shadrack, we've seen impressive numbers coming on the back of an electioneering period. This is not normal. What is happening?
Well, I think probably when you talk about impressive numbers, you're probably looking at the stock market. And what we've seen happening is you realize for some time we had a lot of people you'll realize business was almost a standstill. You might have heard that from a lot of people.
Yes.
So what we had is a lot of companies were announcing profits for prior year, and a lot of people, when we're holding money, they were thinking these are best bets.
Yes.
Most of them are looking actually at the dividends that will probably be coming now.
Correct.
So we probably saw quite a bit of investors, more foreign but a few also local, trying to put their money in the stock market. Correct. Because every other thing with the election period, no one was very sure what was happening. So from where we stand, that's why we've seen a lot of movement going to the pushing the stock market up.
Now, Shadrack, also a lot of you just mentioned it as you're speaking, participation by foreign investors. It doesn't seem to have been affected by the electioneering period and the waiting period for the ruling by the Supreme Court.
Well, surprisingly, I think what we've seen happen is we've seen the foreign investors have been more going to the NSE. Correct. Probably because the thing is more regulated. But we've seen them withdraw more from, say, the venture capitalists. I will tell you, a lot of venture capitalists,
so they're moving them,
a lot of investors who are not going to the, they're most going to the established market, which now regulated by NSE. So that's what we've seen, and I think that's why we've seen a lot of sustained business from the NSE. But if you actually look at the business just below the publicly quoted companies, you hear a lot of, you probably about tourism wasn't doing very well. Correct. And even from what you've seen, you've just said TPS Serena has been going down. And we've seen quite a lot from the tourism and
so an indicator of some of the tourists didn't actually show up.
Yes.
Shadrack, also an important thing, let's talk about inflation a little bit.
That's right.
We saw inflation index easing and slowing down steadily until January. Yes. February, we're expecting the March numbers. But if you look at that kind of a trend, it also coincides with the electioneering period. What is the relationship between campaign monies and inflation?
Well, a lot of people, what we've seen is, let's say, a lot of politicians will probably started holding some money. Correct. Say for 2-3 years, when somebody knows that they're going to go for an election. Yes. What they tend to do, you tend to save quite a bit of it. Yes. And during the election period, we saw a lot of that money now being flooded into the market. I remember you probably saw it was still in the media. I think about 2 weeks ago or 3, where we'd seen a lot of people saying how they benefit from the campaign money. Yes. Through the print media, all these campaign collateral. So we've seen a lot of, by putting that money in the market, we've seen a lot of that pushing the inflation now. So
are we expecting the inflation to slow down, say, in the March and April figures?
Yeah, we cannot talk much about April, but yes, we will expect March, because you realize actually during March, like January and February, where we had seen a lot of spending from the politician, in March, I think, was a very slow month because
Yes.
we've just put from an election,
Yes.
and there was a hang. People didn't know how it's going to be. So I expect probably we're going to see a huge dip on the inflation in March, and probably April. Now we might see again that coming up because now a lot of people are now releasing money into the market.
Now also, Shadrack, still on the how people behaviors during this period, we saw a lot of panic buying, especially when the Supreme Court went into session. Yes. Guys bought before the elections. Guys bought a lot of stuff, and the supermarkets shelves were empty. How much an impact did this have on say the economy and spending powers in the country?
Well, I would say on the bit of the huge buying around the say the election time, yes, or during the judgment, yes, that one would say that it had quite a bit of an impact. Yes. But it was very limited, considering that a lot of people were buying, and there was not a lot of business activity. So yes, if you only look at that buying in an isolated case, is not quite much, yes, as to affect inflation. But yes, but you also understand a lot of people, while we had those panic buying, is a lot of people still have the hangover of 2007, correct, where all the facts are looking about the same, where we had one candidate being declared, the other candidate, and somebody saying that was not the election was the bangled up, yes, and all that. We see that going to Supreme Court. So anybody who was there in 07 would have seen this is the same indication that we saw in 07.
It was precautionary.
Yeah, so that's why you probably saw that.
Finally, Shadrack, of course the market is peaking. We haven't, the election petition has been determined. Yes. The president-elect is being sworn. Things are really going back to normal. That's right. But in terms of investment, what are the, say, areas to look out for going forward as we pick up as a country? Well,
I see a lot of research from my business community trying to focus on the county government. Yes. You probably also heard the president earlier say that county governments will probably be quite important in the development or, yes, the development of this country. Yes. So we are going to see a lot of realignment. For, correct, a long time, investments have only been focused around towns. But I see a situation where we see a lot of companies now trying to see which county we go to. Right. I'm also seeing a situation where different counties specialize in different products. So you might find if somebody is in probably in the cement manufacturing, you might see them going more to Kitui County because of the coal. So we might see quite a lot of an alignment around different people wanting to position themselves in different counties. By and large, I also would expect that now that election has been over, you might actually see a very fast fallback, because a lot of people have been impatient. We really want to start it, and you actually would, a lot of business will also tell you from around December, yes, there hasn't been a lot of business. So we, correct, probably might see quite a lot of spending, a lot of marketing, a lot of business doing quite a bit of stuff.
But you reckon county government is the game changer?
Yes.
Right. Many thanks, Shadrack Kioko, for just shedding light on what is happening in the world of business in this country and just making sense of the figures and the numbers for us. Many thanks for dropping by at the news.
Not a problem. Thank you.
Asante sana. Now, moving on, we've just been looking at what is happening in the Kenyan markets, but we want to go to other African markets, and a segment that we call Factors to Watch in the African Markets. Of course, it is courtesy of the Reuters news agency, and we will start today in South Africa, where South African rand touched its strongest level in 9 days against the dollar on Thursday, buoyed by data that showed the trade deficit narrowed sharply in February. Now, meanwhile, South African stocks ended slightly lower on Thursday ahead of the 4-day Easter long weekend, with banks and retailers taking hits amid concerns about Cyprus crisis and domestic spending. Let's go to other African economic giant, that is Nigeria, where the Nigerian interbank lending rates eased to an average of 10.25% this week from 10.66% last week due to a big cash inflow from matured treasury bills. Still in Nigeria, Barclays will add approximately $16 billion of Nigerian debt to its emerging markets government bond index from April the 1st. Now, the bank has confirmed this particular report. Let's come closer home to Rwanda as it aims to lift economic growth to an average of 11.5% a year during 2013 through 2017. Now, the government said this on Thursday, shrugging off suggestions of that growth will be constrained by curbs or aid payments. Let's come even closer home to neighboring Uganda, whose year-on-year headline inflation rose to 4.0% in March from a revised 3.5% in the previous month. Now, the Statistics Office has confirmed this to a Reuters report. Elsewhere, Zambian inflation slowed to 6.6% in March from 6.9% in the previous month. And finally, Sudan exported $2.2 billion worth of gold last year and hopes to step up exploration with the help of Russian and Chinese companies. President Omar Hassan al-Bashir announced this on Monday, that is Easter Monday, giving the first official figure. Right, and those are the factors to watch in the African market, of course, courtesy of Reuters news agency. Now you know where your money is and where it really needs to go. Let's come back home to Nairobi, where the oil marketing firm Total Kenya late last week issued a profit warning for its full year to December 2012 results, saying it is likely to lose a multi-million shilling oil supply case relating to the collapsed farm Triton. Now, the listed oil marketer is facing a 673.7 million shilling claim before a London court from Anglo-Swiss oil trading firm Glencore, which financed Triton's oil deliveries in 2008. Total Kenya has warned investors that adjusting the firm's accounts to include the settlement will result in a loss higher than 71.4 million shilling losses it recorded in 2011. Triton and Total Kenya had jointly won the tender for the provision of petroleum products to KenGen for the geothermal generation. However, in December 2008, Triton was placed under receivership after it failed to pay financers Glencore, Fortis Bank of France and KCB here in Kenya. Well, of course, we'll be keeping you with the details of what is happening as regards to what is happening to Total Kenya and their fortunes going forward.